Right now, as we speak, the stock for Datavault Inc., trading under the ticker symbol DVLT on the Nasdaq, is experiencing the kind of volatile, electrified movement that usually signals a massive repricing event is underway, hovering right around the $2.40 mark with intraday swings pushing it down roughly 5% in the early hours of this session. If you are watching the order book, you are seeing a frantic tug-of-war between legacy holders of the old entity and new capital flooding in to chase what might be one of the most aggressive guidance revisions we have seen in the microcap space this year. Most people looking at this chart see a small-cap tech stock struggling to find a floor after a corporate pivot. They see a company that used to be about audio technology and assume this is just another desperate rebrand to catch the artificial intelligence wave. That is the expectation, that this is just noise. The reality, however, is substantially more interesting and financially violent. We are not looking at a simple rebrand. We are looking at a company that has effectively been backdoor listed into a massive data monetization engine, one that has just raised its future revenue guidance by nearly 400% and secured a strategic partner in Scilex holding company that values their stake at hundreds of millions of dollars, a figure that seems to completely disconnect from the current market cap you see on your screen. When you look at the sheer volume of shares changing hands today, it becomes clear that the market is trying to digest the magnitude of the recent news cycle. We are seeing volume spikes that rival the relative activity ratios of major momentum darlings, although obviously on a smaller absolute scale than a Tesla stock or an Nvidia stock. The price action today is choppy, whipping between $2.20 and $2.50, creating a trader's paradise for those who know how to read Level 2 data on their interactive brokers' trading screens. This isn't the slow, steady climb of a dividend aristocrat you might stash away in Fidelity mutual funds or Schwab Intelligent Portfolios for 30 years. This is a battleground stock. The selling pressure we are seeing intraday, pushing the stock down roughly 5 or 6% at moments, is largely technical, likely caused by warrant holders or previous investors exiting positions as the liquidity event allows them to cash out. But for every seller unloading shares, there is a buyer stepping in, likely fueled by the realization that the company's new guidance puts 2026 revenue targets at over $200 million. When you contrast that future revenue figure against the current share price, the discrepancy creates a tension that usually resolves in one of two ways. Either the guidance is a hallucination and the stock crashes, or the market is wrong and the stock has to multiples higher to catch up. Let's pause on the price action for a second and talk about what you are actually buying here, because the confusion is the opportunity. Most retail investors scanning Robinhood Investments or checking their SoFi stocks list see Datavault and might not realize this was, until very recently, YSI Technologies. The expectation is that this is a hardware company. The reality is that YSI acquired the assets of Datavault Holdings and installed their CEO, Nate Bradley, to run the show. This was a reverse merger in spirit, if not in strict technicality. They have completely shifted the business model from selling audio chips to selling the tokenization of real-world assets. Now, I know tokenization sounds like a buzzword that people throw around in Robinhood crypto section, but in this specific context, it refers to a patented technology called ADIO. This system allows companies to take a physical or digital asset, like a pharmaceutical patent, a land deed, or a massive data set, and create a digital twin on a blockchain that can be tracked, valued, and monetized in real time. This is why Scilex, a biotech company, is involved. They're not buying audio chips. They're paying Datavault to build a biotech exchange where drug patents and clinical trial data can be traded and valued instantly. The current intraday movement we are witnessing is heavily influenced by the closing of the second tranche of the Scilex investment. This is critical to understand. Scilex didn't just write a check. They made a strategic investment that included payments in Bitcoin, yes, actual Bitcoin, to secure their stake. When a publicly traded biotech firm starts moving millions in cryptocurrency to buy a stake in a data AI company, you have to sit up and pay attention. The market is struggling to price this because it crosses so many sectors. Is DVLT a crypto play? Is it an AI play? Is it a biotech services play? The algorithms that run Schwab Intelligent Portfolios or the automated trading bots on interactive brokers platforms often struggle with these multi-sector hybrids, which is why you see such inefficient pricing. A human trader looking at this sees a partner, Scilex, willing to value their positional stake at a premium that implies a stock price significantly higher than the $2.40 we are seeing today. I want you to take a second and comment below with the number of shares of DVLT you are currently holding, or if you are just watching from the sidelines. It is always fascinating to see what the average cost basis is for our viewers, especially in a stock that has moved this violently in the last few weeks. Now, let's look deeper into the real-world asset, RWA narrative, because this is where the long-term value thesis lives or dies. The general investing public, the folks who stick to Fidelity ETFs or Vanguard index funds, are used to valuing companies based on price-to-earnings ratios of the last 12 months. If you apply that logic to Datavault right now, the stock looks terrible. The financials of the old company, YSI, were not great. But the market is a forward-looking machine. The expectation is that the past performance of the ticker predicts the future. The reality is that the asset base has completely changed. Datavault is claiming they can generate high-margin revenue by taking a cut of the data they manage. Think of it like this. If they manage the data for a massive pharmaceutical trial, and that data is sold or licensed to another drug company, Datavault gets paid. It's a royalty model on data. This is why Scilex, a biotech company, is involved. They're not buying audio chips. They're paying Datavault to build a biotech exchange where drug patents and clinical trial data can be traded and valued instantly. The all-day volume and price action on this stock today is purely speculative, 100% based on the news headlines and not on any fundamental earnings or revenue from the past. This is almost a perfect case study for how to trade on news releases and not on technical analysis alone.